Despite a planned 72 billion naira investment by Nigeria's government into the electricity distribution companies, the private investors who bought the 11 discos have offered to hand over their assets to the government or any buyer within 24 hours once they are paid compensation. George Etomi, director at the Eko Electricity Distribution Company, joins us to discuss the state of Nigeria's power sector. Thank you so much for joining us, George.
Thank you. Good afternoon.
You're always smiling when you come on the show, and I'm wondering if you won't be smiling today. I just want to ask, are you one of those who are saying, you know what, come buy it up, I do not mind having a $10 million loss?
Well, the fact is, if you take your mind back, from the outset, we said that there was a liquidity crisis. And that was because it was always known and agreed by both sides that at the onset of the privatization, there was a need for certain measures to be taken on the part of government to ensure liquidity. But none of these have been met. Now, on the other side of the spectrum, the government is holding the distribution companies to the promises they made, i.e. meter all the customers, reduce AT&C losses, and all that. And the distribution companies are saying, for as long as we have a product that is the goods price is regulated and we're being made to sell at a loss, we're going to have a funding gap. And it is that gap that grows every day because it's still unaddressed. Now, the government is saying, you're not investing, you're not improving on the network, you're not metering customers. All these things are a function of tariffs. The government agreed that at the expiry of the temporary electricity market, they would allow for a level playing field, which was the reason the minister announced the eligible customer. That has not happened, but the eligible customer then is coming on board, which means we're having new players who haven't taken the risk that we're taking, but they are being promised more or less cost-reflective tariffs, and most of the customers will come from our network, which is what the discos are fighting. The little breath of fresh air that we are with our key customer groups are being poached, as it were. Now we hear suddenly we don't have exclusivity to the areas which our license clearly entitles us to. So that's also playing out. So much is going on by way of uncertainty. And the pronouncements from the side of the government is not helping investors. Don't forget, from the outset we took a risk. The discos collectively paid $1.4 billion for these assets. There was a guarantee of a certain minimum returns when the business started. We've not gone it. Most of our equity has been wiped out, which is why we're saying, look, if we continue to operate in a hostile environment, it is much easier to give up the assets because many of us, it's a real problem.
No, but George, at the moment, I mean, we're hearing about the government releasing how much now? 72 billion naira. A planned 72 billion naira investment. That's not enough to keep the discos calm?
I don't know the context in which these releases are being made. That's not the problem. There are contracts that have been signed. All we just need for government to do is keep to your own side of the bargain. These are palliative measures. You throw in something. If you don't deal with that gap, which grows every day, we're talking about a gap of about 1.3 trillion naira. What will 72 billion do? Now, that's for the entire sector. The government, one of the promises they should have kept would have been to allow for 100 billion a year for 2 years subsidy to support the most vulnerable of those that would be caught when tariffs get to where they should be. That has not happened. So what is going on is that we're using the high-paying customers to subsidize the low ones. Those are the fundamental issues that should be addressed. Okay, once you address it, like I said, the laws of economics will not change because this is Nigeria. If you sell a product below the cost, it's a problem. There's just no other way you can look at it.
But see, besides the change in contracts, or what's coming up, later on. Don't you think, the sign was there from the very beginning? I remember, I'm not sure if it was you I asked or Tunde Gbajumo, I said, when most of these private investors went into, of course, buying most of these assets, did they really, do a thorough background check of what they were buying? It's almost like buying a mansion for 300,000 and realizing that there really is no foundation.
Let me tell you, it's good you asked this question, and we will not stop explaining what happened. The RFPs were sent out. People responded to them. There was a data room where you go and based on what's in the data room, you put in your bids. There was a clause that said we would go on ground, on site to verify what has been put in the data room. Labour did not allow it. So Labour did not allow it.
So
we had paid 30%. No, we had paid 30%. Labour did not allow it. And so we were stuck having paid the 30%. Government went back. We went back to government to complain. So it was a function of refund us that 30% or bite the bullet, and then we will still make good all these promises. Let me tell you something. If they made good on those promises, allow for cost-reflective tariffs, clear your MDA debts, let that subsidy that we're talking about happen. Those about 5 of them, we would not be here today.
But you know, we've always had that debate around cost-reflective tariff. I understand. I mean, I was talking to the MD of PHED once, and he did say, look, even if everyone in Port Harcourt pays 100%, if everyone pays, if we can get everyone to pay, he says we'll still be running on a deficit to begin with.
Look,
I understand, but George, the problem here is we never addressed, you know, the need for the infrastructure to ensure that everyone who uses electricity pays. So at the moment, even if there's a cost-reflective tariff, the rich will still pay for the poor, don't you think?
No, there's everywhere in the world. There's always cross-subsidization. It happens everywhere in the world. It's not going to be peculiar. But what you want to do is you want to reduce this gap as much as possible. It's a liquidity issue that we are talking about. If you allow this gap to continue to grow, like I said, except you get angel investors, nobody will bring their money into an obviously loss-making business. So you just need to create, it's the environment we want. That's what the government owes us. But going into a war with investors, people put real money there. People are going to be bankrupt. People, it's not just the tone. We just need to know these problems have existed since God knows when. So we don't and want they're not going to done overrun. So we just
we don't just want the 72 billion naira. We need to sit down and address these issues once and for all.
We've always wanted to do that, so that you look at the whole problem in a holistic manner, not firefight. Something happens, you go after it. And
but I guess Discos are speaking with one voice now, and who knows, maybe that would actually pull the government out to say,
we need to talk.
Let's sit down.
It's a value chain now, and everybody in the value chain needs to talk.
We're going to follow up the story. Thank you so much, George Etomi, Director at the Eko Electricity Distribution Company.